Let's go ahead and just dive right in here to the grain trade now that we're getting closer and closer to the USDA report coming out in a little over an hour from right now. I'm Marlon Bowling, your tour guide, and here we go with a look at our markets as they stand right now. Interesting how the July corn is firming up as we get toward that report. We have July now 15.5 cents higher, and our quotes provided by Bar Chart peg the July at 7.06 1/4 right now. And so we're firmly above the $7 benchmark again. How about that? December now 7 3/4 higher at 617.5. Interesting action, I would say, as we head into the report. Why are they doing this? Okay, in the soybean trade, now we have July soybeans 6 1/4 higher at 15.68 3/4. Now that's still about 8 cents off of our earlier high from last night, but it is higher. We have November now 9 1/4 higher at 14.57.5 right now. You know, that's actually off of its earlier low by 13.5 cents right now. So a bit of a rebound here in the soybean trade. Soy meal, what's it doing? Well, you have the August contract up $1 at 389.40. So it's gaining today. Had pretty good export sales on soy meal, actually outpacing the soybean sales. Soybean oil, we have August now up 4 points at 69.01. And in the wheat market in Chicago, July is now trading just 1/4 cent higher at 682.5. However, the other months are lower. September down 1 1/4. In the Kansas City trade, you have July now trading 4.5, now 4 1/4 cents higher at 640 even per bushel. In the spring wheat trade in Minneapolis, July is now up 8 cents. Look at it go, 772 1/4. Now we're 11 cents off of our overnight low. So let's go to Ted Seifried of Zaner Ag Hedge in Chicago. He joins us right now. And Ted, good to visit with you again. Appreciate that. A little bit of a bounce in the markets here as we get toward the report. What do you make of that?
Yeah, quite a bit of strength. It's all being led by the July corn, it seems. And, I've heard a couple of rumors that we might be getting an announcement from the private sector on the ethanol front. And that might be giving us some strength in the old crop corn complex. So that's been really good. Now, we do have a report coming in here at 11 o'clock today. This is a June WASDE report. We don't really feel like we're going to have a whole lot of changes on this report. We usually don't because of the big reports at the end of the month. The end of the month gives us acreage. The end of the month gives us quarterly grain stock. So the USDA doesn't really like to make big changes, especially on U.S. production, but also really much on the way of old crop demand when we see this June WASDE report. Now, the big question is, what are they going to do with all those big Chinese sales that happened after they tabulated the numbers for the last report? Are they going to add to our corn exports, or was that already factored in? We're also very curious to see what happens with the South American, that second season Brazilian corn crop. We saw CONAB's numbers drop dramatically, 10 million metric tons here this morning. Will the USDA follow suit? So there are some things that we're looking at, but the bigger reports are at the end of the month. Right now, we're watching weather. That is the big story here for the grains. And as you were mentioning, or as you guys were talking about, wow, there could be some, there could be some weather in the Dakotas, and might be more than what they're hoping for right now.
And we've been also airing reports about the fact that, for example, in Iowa, we heard from one resident in Iowa talking about how dry it is, and it looks like conditions are kind of expanding on the drought front in the center part of the Corn Belt, if you will, and that's raising a little concern as well. It's not maybe going to be a perfect year this year, Ted, and from what we had all heard, we kind of need a perfect crop just to keep up with demand, right?
That's right. And if you look at the 6 to 10 and 8 to 14 day outlooks, there's a big hole right in the middle of the growing areas, really centered around Iowa and Western Illinois and part of Minnesota. So even if the Dakotas get beneficial rain here overnight, there's still not a whole lot of optimism for a lot of other areas as we go through the next 2 weeks. So there's still a reason that we are very concerned about weather. And in a year, as you mentioned, Marlon, where we really needed to be perfect because of the strong demand that we've had and the very low beginning stocks that we have coming into this next marketing year. And
you were talking about the rain in the Dakotas, and of course, as we all know, that's not the primary corn production area. They do grow corn in the Dakotas, but it's not like the 3 I states where that is the bread and butter, if you will, of the production there. So we'll keep an eye on developments there, that's for sure. Ted, the report comes out in a little over an hour from right now. We're going to take a pause right here. We'll come back and take a look at our livestock trade right after this. We are talking with Ted Seifried of Zaner Ag Hedge right now. And Ted happens to be on the road. He's actually right in our backyard in the Nashville area. He's making a business trip here this week. And Ted, actually, I believe we're going to be talking with you live tomorrow in studio. So we're looking forward to that, too. We're trying to get everything all cleaned up here for you. We're going to be taking a look here at the livestock trade. But this morning we had our export sales numbers that came out on the beef and the pork. What did you think of them?
Pretty okay. I mean, not tremendously good, not tremendously bad. I mean, kind of along the lines of what we were expecting from what I saw. What did you think of it, Marlon?
Well, actually, the cattle number, or I'm sorry, the beef number was a little bit higher than what we had last week. The pork number was down a little bit. So China was in there as a buyer. They bought like 2,300 tons of beef and a little over 8,000 tons of pork this time around. So they're still in there as a buyer, maybe not where they were a few months ago. Remember, they had racked up some buys of beef, I believe, around, 7,000 tons or something like that, maybe even more at times earlier this year. I don't know. Is that a thing of the past, or do you think they will come back here in the future and start racking up some of these buys again?
I think they'll kind of be in and out on the beef. I don't. That's not their main protein of choice. And as far as the big pork ones that we had seen from them in the past, a lot of that was all catch up. We found out later that was all stuff that had happened previously and was all being kind of reported at once. So, China just kind of comes in. They're pretty much there most weeks on pork, but it's been sort of a range of 3,000 to maybe 9,000 metric tons. And the beef, they're going to be spotty, and that's just how that's going to be going forward. Now, our domestic demand is really very strong for both beef and pork, as evidenced from box beef prices and pork cutout prices. I don't think that's going away anytime soon. We have inflation here in this country, and people want to spend their money, and they're doing it on expensive cuts of meat. Nobody's balking at higher beef prices, higher steak prices. That, I think, really continues, especially as we get into peak grilling season this month and into the 4th of July. I'm really bullish on the domestic demand for both beef and pork. Now,
Really?
the question is, the question is, are we going to see higher cash prices? And I don't know. I mean, that's the thing, that we've been looking for these higher cash prices for quite some time. But your packers say, well, we can't get more production because we're having a hard time getting our workers coming to work or adding workers to really up the slaughter and so on and so forth. And really, it's kind of blaming COVID, but really blaming the workers' compensation and the unemployment benefits that have been rolled out by the federal government. As that starts to go away, though, how does that work? I mean, the profit margins are really good. I feel like they could offer more money to bring in more workers, but apparently that hasn't been working so far.
All right, looking at our cattle futures right now. On our quotes provided by Bar Chart, you have August live cattle 32 cents higher. We're at 118.60. And on the feeder cattle side here today, we'll go ahead and go with the August contract. It's 47 cents lower at 147.80, but I will remind you it's off of its earlier low of the day by over $1 now. And in the lean hog trade, we'll go with July, and it's now 47 cents higher at 121.97. So it's been chopping around on both sides of unchanged here so far today. Thank you for joining us, Ted. Look forward to an in-studio visit tomorrow, and we'll get prepared for that. Ted Seifried of Zaner Ag Hedge. He's based in Chicago, currently traveling in Nashville. Janet, back to you.